Are you a trader who loves riding profits but would like to learn a very reliable pattern suggesting a short-term buying exhaustion? Well, today I'm going to show you MasterTrader's gap and crap setup and show you how to profit from it on a retracement. Stay tuned. It's mastertrader.com. I'm Dan Gibby at MasterTrader, and I've been actively trading options for over 25 years. Be sure to subscribe to the channel if you want to learn how to make money investing and trading in the markets. Today I'm going to take you step by step and show you how to trade a gap and crap setup on Square Inc. as a new trade, and then I will also discuss some ways that you can manage any long-term investments on your extended stock. Okay, let's get started. As always, all trading starts with an analysis of the chart on multiple time frames. Square Inc. here, daily chart, has been on a tear, but we're just looking for short-term buying exhaustion, greed if you will. So let's see if SQ meets our setup. Far from the rising 20 MA. And notice here, we say it's kind of stretched like a rubber band. It's very strong. We're just looking for a bullish retracement in this strong trend, but it's run too far. So yes, it's extended from the 20 MA here. And here's our 50 and 200, and you can visually see it's extended from all of them. Next criteria, 5 or more higher low bars. We have 8 of them here, and all you do is just keep counting back until you don't have one of those. So I have 1, 2, 3, 4, 5, 6, 7, 8 higher low bars. We also have increased volume. Notice all this volume in this greed. You had spikes here, of course, but this is showing kind of the last of the run, the greed, as opposed to fear on a sell-off, of course. People, whatever the news is, people are wanting in this stock. And you can see the increased volume, increased buying pressure. Then we have a significant gap up. This one is $1.57, and then we're looking for a bearish intraday pattern to get on board. This is just to show that the longer time frames, here's our weekly and our monthly, it's like a tired marathon runner. This, wow, what a core long entry it was down here. Wow, I'm salivating at that. It had a bullish W bottom, no follow through to this red bar, broke out, 2-month retracement. That was your core entry right there. Wow, that's beautiful. But then, that ran from $10 to $49. And you can see it here also, just the extension, the $10 breakout right here, $49. And I just checked the news on this. Not that I care one iota, but it's just to confirm to you that the reason the stock pattern looks like this is because it's in the middle of many positive news events. That's the only way this chart would be created. So the news that I found here, 2 days ago, it said the stock is on fire and Wall Street can't get enough. That is just a perfect news showing the bullish sentiment is reaching an extreme. Those longer time frames were just a plus to us. Sellers of options, why we love selling options, we're profiting through time decay. And this chart here shows you that the implied volatility, even though volatility typically increases with fear, with market sell-offs, it also increases with increasing greed. So that's exactly what this is showing you. It has an implied volatility rank of 91%, which means it's the highest it's been 91% of the times this year. And that's as the stock's rising, pick up in volume, everything we just discussed. But we love selling options around compelling patterns in all environments. High volatility is a plus here. You don't have to be perfect with your entries. We're just getting paid to predict where the stock is not going to go. And we obviously use options for directional and income producing, as we teach in our full 10-module option strategy series. Finally, you drop down to the intraday time frame and you figure out where you're going to get on board shorts. So there's many different ways to do that. Our Master Trader Technical Strategies course teaches exactly that, exactly how to analyze everything on here, to use multiple time frames, money management, and trailing your gains and pivots, etc. So I highly urge you to check out that if you want to learn more about chart reading aspects. So let's talk a moment about what options trades we did. We actually posted this one in our weekly option trader, which specializes in short-term selling of options and spreads. Actually was more aggressive. I took the trade 3 minutes after the bell opened, the market opened, 2 days to expiration, and these were the quotes. I grabbed them at 9:33 when I entered. So I sold naked calls. They were 50 by 60. I just hit the bid. But be careful at the market open, and that's why we can't give official entries on that. We say typically a 30-minute low, or we'll use our text alert to send out a more precise entry on the intraday pattern. But aggressive traders, and we're even talking about forming a chat room, this would be a trade that we would give on live audio where we're watching it in real time. But it had a lot of huge open interest there. So that's another reason why selling that call makes sense, because with that much open interest and the old Wall Street axiom of the options are going to expire where the most amount of people have the most amount of pain. In 3,299 contracts expiring worthless, which is under $50 in 2 days to expiration, those are all going to expire worthless. So I joined that party and I sold those $50 calls. And just part of our overall risk management, I always just put a order out to close my trade as soon as I'm in it. And in this case, I only had 2 days of risk, but I said, hey, if I can get out for 10 cents and not even have the overnight risk, why not? And I got filled in 45 minutes. So I made 80% of my max gain in 45 minutes, and I didn't have to sit another day and a half until, well, actually 1 day until expiration. For longer term, so this is what we did for our option layover clients, because it's extended on multiple time frames. Depending on the risk parameters of each particular hedge fund, family office, etc., that we help out with this consulting service, they might want to sell the at the money $50 calls. And the math on that is, let's say you got filled at 5-cent price improvements, you got filled at $1.95. For 23 days till expiration, that is an additional 4% yield. And the only slight downside is you're capping your gains at your break even of $51.95. But we've made an extra 4% yield provided the stock doesn't close above $50 in 23 days. Some clients, we got them into these $55 call because that gives them another $5 of cushion for the stock to continue to run, even though it looks pretty tired. That marathon runner's been on a tear. And you could get 70 to 75 cents for that. So it's just a trade-off of how far you want to sell out your call. You're going to get less money of premium in your pocket. But we obviously teach all that in great detail in our Option Strategy Series course. Here is the Master Trader Weekly Options Trader that I mentioned that specializes in these short-term trades from an hour to 10 days is what we specialize in. And we do gap trades, earnings trades, just high premium trades, and it's a marvelous service. I urge you to check it out. You can subscribe, get a 21-day, $7 trial to our Master Trader advisory letter, and then we throw this one in for a test drive also. Okay, that's all for this video. Be sure to subscribe to our chart of the week and check out our advisory letters on the website if you're serious about wanting to make money investing and trading in the markets. And keep watching these videos here. We've got a ton of great information to help you learn our simple approach to generate wealth in the markets. Thanks so much for watching. Happy trading, and see you next time.